90% traders know how to use RSI indicator, but why do you lose money every time you short in the overbought condition and buy when the price is oversold? Because you just know the common usage of RSI but don't know the key point of it. In this video, I will explain you the most important point of RSI from the practical experience aspect, which could help you to highly improve your trading win rate. Hi, I'm Alice. If this is the first time you watch my video, welcome to subscribe me. There's more useful technical analysis strategies videos in my channel. Okay, let's jump into the point. Firstly, what is RSI? The full name of RSI is the Relative Strength Index, which is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price. The RSI is displayed as an oscillator, a line graph that moves between two extremes, and can have a reading from 0 to 100. An asset is usually considered overbought when the RSI is above 70% and oversold when it is below 30%. Traditional interpretation and usage of the RSI are that when indicator become overbought, it may be primed for a trend reversal or corrective pullback in price. And when indicator is in oversold condition, it also indicates that there's maybe a trend reversal or rebound. Of course, the example that I have shown here is quite nice, meaning both the candlestick pattern and the RSI perfectly align to confirm the same event occurrence. This is not always be true. This leads us to another interesting way to interpret RSI. Imagine the following two scenarios. Firstly, a stock which is in a continuous uptrend, the RSI tends to stay above 30%. And should frequently hit 70% if it remains stuck in the overbought region for a long time. So in this case, do not short trade easily, even if the price is overbought. For example, this chart, invariably the trader will be looking at shorting opportunities, but the market, on the other hand, will be a different orbit. Of course, you could pay more attention to the buy point of moving average, since the price get high possibility will continue to go up after a short-term decline. The same situation to a downtrend. The RSI will be stuck in the oversold region and will to exceed 70%. The traders will be looking at buying opportunities, but the stock will be going down lower. So in this case, instead of taking a reversal position, you can consider initiate a trade in the same direction. The last question. How do we know if RSI is the right time to use? Check its previous trend and the previous price regulation. If the price fluctuates widely, the success rate of RSI is considerably high, then you could feel free to trade. Of course, the win rate will be higher if combined the deviation conditions. And if you are interested in this point, leave me a message. I will consider to make another video for it. Okay, if you think my video is helpful, subscribe my channel, hit the bell icon so you will be notified each time we upload. And leave us a like to show your support. I'll see you next time. Bye!